following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 3rd. Terrific, maybe turnaround Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Would love to hear from you, 877-927-6648. Of course, internationally, 727-445-1044 on this terrific Tuesday. Let's get things started out here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 142 points at 17,748. S&P down 18 points at 2063. NASDAQ Composite off 43 at 4774. Russell 2000 up 17 points, traded 1122. The DAX closed down nearly 200 points. The FTSE off 56. Gold's trading back $6. Silver's off 24 cents. Light sweet crude back $1.17. Apple's up $1.49. Rejecting price yesterday, closing with that hammer candle. But we've got hammer candles in the U.S. dollar index are very close to it as we speak right now. So plenty for us to take a look at. Of course, you can always send me an email, Steve at TFNN.com. If you can't call in, I'll try to get to your question as well as Inside the Tiger Gin. Just go ahead and ping me. I am me, and I will do the same. So where do we want to begin? Well, I think what we want to begin with, let's take a look at one of the charts that I posted inside the den before the chart, about a quarter to when I logged into the system out here. And this will give us a feel as to what the market is doing, why this could be turnaround Tuesday out here. Because you and I, we trade just a couple of patterns out here that help us understand the stretch of the rubber band. And as we take a look at this chart, hopefully you're watching us on TigerTV, but I'll describe to you what it is we're looking at if you're not. We're looking at 30-minute charts for the S&P futures contract, the ES. That's the top panel. The center panel there, that's the NASDAQ futures, also a 30-minute chart. And the bottom panel is the Dow futures chart. Now, you might say, well, how come not the Russell 2000 out here? Let's just stay focused on these three. They give us nice messages out here with regard to what the market was doing. As it was pushing down this morning into the time frame here of 12 noon, we saw price moving lower, doing it with less relative weakness. Really, the pattern really began setting up here at 10:30 this morning. So at 10:30, inside the ES Mini, you can see he had a nice little hammer candle out here, which was tested for a period of really a couple hour and a half out here. So you had a bullish reversal signal. Now, the cavalry inside the ES Mini, they showed up at 12 noon. At 12 noon, you not only had a bullish engulfing, which was helpful to that hammer candle off on the left-hand side, you also had a key reversal session. What does that mean? That comes within totally different than an outside day. I say get rid of the outside days. They just will screw with your head. You don't need to know what an outside day is. You want to know what a key reversal bar is, and they have to come at an extended condition. Nothing could move us more than price moving down with less relative strength out there. That's extended. That's a rubber band that is stretched out there. And you need to have both the high and low of the prior bar taken out. Well, that took place at 12 noon when you take a look at that 30-minute chart. And the third and final thing, you've got to close in the opposite direction, just by one tick in this case here, 1 penny, depending on, or 1 pip, depending on what it is that you're trading out there. Now, the more the merrier. In this case here, you did have a nice big bullish engulfing candle. Then, to boot out there inside the ES Mini, we got a nice little market profiles out here, which the top of the box in the center, the point of control, a little bit closer together. So that says that 2056 level should be. Now, we're in the 30-minute bar session right now, so it's going to be really important for us to watch what takes place 19 moments from now. 19 minutes from now, if we see a close above 2,057 is what we'll call it, then you will have price moving above a significant level of resistance. Then the next step for the ES Mini is going to be 2060.75 is what we'll call it. That little black line on my chart. You close above that. That says turnaround Tuesday in full swing. Where will we get to? I don't know. We can take a look at different retracement levels, but you've got the makings of a short-term, stay focused. We're taking a look at a 30-minute chart out here, a short-term bottom. Inside the NQ, the same pattern out here. Now, the NQ didn't give us any kind of confirming signal until 12 noon. That was the first time that the cavalry arrived. That formed for us a key reversal session, a bullish engulfing candle out there. In this case, we can see that price is clearly above its TAS market profile resistance level of 43.39 out here. It's above Stevie's black line. That's an important black line at 43.42. So the NASDAQ is giving us a signal that it wants to move higher intraday, the rest of the day out here. Well, it looks to me like the rest of the day. So that says you got turnaround Tuesday. Now, it wants friends. So it wants the ES Mini. It needs the ES Mini to get above that 2061 level. And in the case of the Dow, it's right up against Stevie's black line out there. That black line right around the 17,684 level, 685, somewhere around there. And if the Dow futures gets above that, then it too will go ahead and continue the bounce. Now, that is taking a look at the 30-minute chart. Does that change the daily time frame and the messages that are out there? Well, remember, we have been saying that there is only one indice thus far that has given us any kind of topping confirmation. Not signal. Signal's a different thing, but any type of topping confirmation. And that's the NASDAQ Composite, and that is the NDX 100. With regard to all of the others, it's not in. Topping the signals, yeah. Topping confirmation, no way out there. Now, let's do this. Let's move over from the markets because we know what's going on short-term wise. We can come back and take a look at long-term wise. And I see a question in here that's asking me about TZA and SH, and we'll do that after the break. But let's take a look at the U.S. dollar index. We looked at this yesterday, and what we can see here today, the close on the U.S. dollar index. Oh, let me switch over to the continuous contract. That's right. And so the close on this is going to be very important out here. What we did identify, right? We said, you and I, we looked at the U.S. dollar index and we identified that consolidation pattern. We said the back of the U.S. dollar index is up against the wall. Now, an important wall out here, a wall that is the bottom of the consolidation pattern. And we're going to use the level of the candle from August 24th. That's priced out at 92.52. Like you and I took a look at, until we see the cavalry arrive, until we see a bullish pattern out here, then the price can move lower. Well, during the day today, we have seen such a move. Now, we don't have a key reversal out here yet. You would intra-session if we were to see a spike above the 93.06 level and then just simply one tick higher of a closeout here. If we can see the U.S. dollar index, I'll just simply gauge it probably around 92.81. 92.81, you got a bullish reversal candle, piercing candle. You start getting up towards the 92.88 area with not much further to go. You've got a hammer candle at a level of support. Steve Rhodes with TFNN. We'll be right back, and we'll talk about what that means for Goldilocks and silver. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 127, S&P's down 17, NASDAQ Composite is off 38. Now, before we went to that break, we're taking a look at the U.S. dollar index. So here's what we know. It's a continuous contract that we're looking at. Been traveling in a beautiful consolidation pattern. You could take it back, really, if you wanted to, until about the January of 2015 timeframe. So we've got about a 12, 4, 5, almost a 16-month consolidation. How do you like that with math and months out there? Oh, just a mathematical genius. So we've got a nice, 16-month, 17-month consolidation pattern that is ongoing. We don't have the bullish reversal signal yet. We did probably about 20 minutes ago, but it's all going to depend. For me, it's all going to be dependent on whether or not a bullish reversal candle forms today. It doesn't have to, and if it doesn't today, it can tomorrow, depending on what today's candle looks like out here. Now, if this level holds, which I suspect that it will. Why do I suspect that it will? Well, I started doing some research into what the commercial traders are actually doing with regard to the currency pairs that make up the U.S. dollar index. And just to make sure that we had these confirming messages out here. As you know, I have contended by looking at the data. It is not my personal opinion. You can form whatever opinion you like. But when we take a look at what commercial traders are doing with regard to gold, what the non-reportable group is doing with regard to gold out here, commercial traders, the bottom panel out here, they are taking huge, can I say huge wagers that gold is going to get piled on and move down to the downside in a rather large way. Highest net short position in years with regard to gold. The same thing with silver. So, okay, we saw that nice little move last week on Friday, no question. Potentially a blow-off top out here. And so I just said, well, what are that? I don't have the chart here. It's just too much data for me to sift through and try to chart with regard to what are commercial traders doing with regard to the U.S. dollar index. And I especially wanted to do a little bit of that work here when I saw that we saw the U.S. dollar index getting down to the bottom of this consolidation. Well, as it is, so commercial traders, and this way, what's nice about this is, somebody might say it's producers or what have you, and so you take a look at gold and you can be skewed here. Well, with regard to the U.S. dollar index, they are now down to huge, less net short, nearly net long the U.S. dollar. So they are anticipating that the U.S. dollar index is going to be moving higher. We'll see if the cavalry arrives, which would then very likely be the instigator of both gold and silver. In the case of silver, here's the silver chart out here. And if we take a look at it, you're going to see that they, too, are at the highest level of net short, this being the commercial traders. I haven't shown the non-reportable group out there, the ones that will get submerged. You're trading with stops out here, so I don't have to worry about you. But it's those other people that believe they're invincible, and they don't need to use stops out here. We all need to use stops. It doesn't matter if it's a trade or investment. You got to do it, and you have to do it when you are when you are the most objective, because each of us, I guarantee you, each of us out there have been in a trade. We didn't have a stop. We had a mental stop. Price got down there. We looked like a deer looking in the headlights and saying, now what do we do? You know what? It'll turn around, and then trade goes against you a little bit more, and then you say, now what do we? It's going to turn around, right? You do that, and eventually, it's worse than Russian roulette, because it's a gun that's full of nothing but bullets out there. So always use stops. So the synergy, and we'll know if we get a signal today or or tomorrow out here, but it does look to me like this is the line that's drawn in the sand. And we get that bullish reversal signal inside of the U.S. dollar index here, then maybe it is off to the race with regard to a much-needed correction inside of the metals out here. But the big guys have taken their wagers. Maybe they're continuing. We'll have more information certainly on Friday out here. But at least I did that work to just say, okay, where is there a piece of material evidence or information that I was overlooking? And it proved that the answer was no. Now, yesterday we talked about key reversal sessions when we looked at that 30-minute chart out here. It seems to work, and you should pay attention to it. Wouldn't you agree? Well, then if you're in that camp, then, well, why wouldn't you be paying attention to yesterday's key reversal inside of silver? Here's the current silver contract out here. Hi-ho silver. What did it do? Well, if you take a look at yesterday's candle, exceeded the prior day's high, exceeded the prior day's low, and finished in the red. All it needed was just really one little penny to finish in the red out here, but it did more than that. So you've got the reversal signal that's in place out here. The key, though, in my opinion, is going to be that the U.S. dollar index. We'll see if that consolidation bottom goes ahead and holds. With regard to gold out here, 1290 right now, do you have any kind of reversal signal? The answer is no, we don't. It's just not in the cards. It's just not out there. You certainly could have it tomorrow if gold trades just like this. Then you have a candle that fits probably about halfway into that body of the session from April 29th out there. So, we'll go ahead and continue to keep our eye on that. We've got light sweet crude. That's pulling back. It's trading out at 43.61, down to $1.17. Light sweet crude is headed down to the bottom of this rising price channel out there. Now, it's got a couple of stops on the way down. If we put on our TAS market profiles, we'll see that the next stop on the way down is the 42.06 to 42.93 level. You get down below that, then that sets off about 39.85. That's the weekly point of control area out there, the bottom of a rising price channel. We'll see if, in fact, that area will hold out here. And it's very possible, by the way, that when light sweet crude gets down to that level, if in fact it bounces, that may be the next at least short-term bottom inside of the market. Just as in short-term bottoms. Remember, we started off taking a look at 30-minute charts out there. You got to stay glued on the 30-minute chart out here in that 30-minute time frame. I also mentioned that, the NDX 100, the NASDAQ Composite are the ones that have given us the topping confirmation. If we go take a look at the advanced decline oscillators for the New York Stock Exchange, that's the left-hand panel. Just to the right of that is the NASDAQ Composite, and further to the right is the Dow. You'll see they're all below zero out there. Being below zero says that it is sellers that are the ones in control. They don't have to bust out the lows of a couple of days ago. Of course, inside the Dow, you and I talked about how important that low is. Why? Because that is a hammer candle. You get below that, then that sets off a avalanche, move back into the 17.4 type area. Maybe that's not such an avalanche. It's only about 350 points to the downside, but it could get worse than that. And as long as we're here taking a look at this, you got the VIX index. The VIX index is suggesting right now that the market still wants to bounce even more with regard to those 30-minute patterns. Why do I say that? Because the 50-day exponential moving average inside the VIX index, that's priced out at 1584, and the VIX continues to find that to be a resistance level, which says it's really important Because once we do get a close above resistance, that would be your 50-day exponential moving average, then it's going to be off to the races into like the 1774 type area out here. It could be that is where we see the VIX index sort of top out on this next move out here. Let's take a look. Let's stay with the concept here with regard to what the indices are doing, and let's go take a look at some volume. Let's see if we can get a couple of volume metrics. We're not going to be able to do that. I apologize before the breakout here because that's like in about 6 minutes. So let's take a look at volume, and by doing that, then let's come back and let's answer Grant's question. Grant is asking about TZA, and he's asking about SH. And I see another question that has popped in here about UNG and Intuitive Surgical, ISRG, otherwise known as brain salad surgery. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 111, S&P's down 15, and so let's go take a look at volume. And then along that path, we're going to go answer the question about TZA, SH. Both those are short the indices. One short the IWM, the other the S&P 500. But let's take a look at some volume metrics out here, get a feel for what's going on inside the QQQ series ETFs. Let me go ahead and turn off these profiles. We don't need those for this piece of the journey here. We can see that volume today about 19 million shares moving into the last time, that says we're going to do about 40 million shares to the downside. There's not enough volume to bust out the lows today. We did 67 million shares just 2 days ago. So you've got the Qs moving lower with light volume out there. What does that say? It says you can't bust them down. You go to try to bust them to the upside. Where could bust them to the upside actually take it to? You'd have to say the bottom of the April 26th level is possible. That is where we had a little bit of a gap down the following day. So that's 108.12. That's the QQQ series. Let's look at the IWM. And this is not completely answering it, but we're going to just see volume metrics, what's going on out here. IWM should do about 48 million shares today. Now, what are 48 million shares going into? About 40 million from a nice little sign of strength out here on April 13th. And then when it was down, it was downtown with 33 million shares on April 29th. So the Russell 2000, if we were to close today below 111.72, that would give you an A to B equals CD to the downside. Now, this trader is short the IWM. You really want to see price close below that level of 111.72. And if it does that, it says that the IWM comes all the way back to this most recent breakout area from April the 12th, which could be anywhere from 108.43 to the 110.51-ish type level. What this also shows us, though, is the IWM, which has been really strong out here. Now, strong compared to what? Well, strong compared to the mere fact that, hey, when I say, I guess when I'm saying strong, let me just rephrase that. Here's what we know about the IWM. The IWM broke above its descending price channel out here, and that's all that it's testing right now. So, when you break a trend line, you like to see a market come back, test it, and if it tests it and rejects it, then it says that you can continue on in the direction that you were headed. So the IWM, although it's got some good volume here, hasn't busted out the lows, is up against a level of support. But let's go out to Chicago, and let's speak with Robert out there. Robert would like to take a look at Whole Foods Market. So, Robert, thanks for calling. How are you doing this afternoon?
I'm good. Thanks, Steve. And Whole Foods reports tomorrow after hours. So, I took a trade on this before, and it didn't work for me. I bought it around 30.30. It went up to maybe around 34, and it just came right back down and took me out.
Okay.
Does anything show you that this is a good short? Do you think it'll fall off the cliff tomorrow on earnings? What's your view on it?
Well, if we take a look at it, here's the information that the chart is at least providing to you and I. So as we speak right now, after about we've been trading for 4 hours today, it's done 4.2 million shares. That says it's going to do about 7 million. And the last time, the swing point out here, Robert, was 7.7 million on February 8th. So from a volume perspective, you're kind of pushing into a swing point with similar volume. If it were like half the volume, then it would be saying it doesn't have enough really, most likely, to bust out the lows out here. So volume-wise, that metrics isn't providing us with any type of... Now, it's also not pushing into that swing point with volume. With you're talking about maybe can this bust out the lows. If there is an A to B equals CD to the downside, what I would focus on, Robert, is the April 12th candle. Now, that had volume of 5.7 million shares, and the low of that session is 29.07. And so if you were to see a close below that today, 29.07, that would say, okay, you could have an A to B equals CD to the downside. But, I'm concerned out here that, it's if you look at, there was a sign of strength back on November 5th, and that had 23 million shares to the upside. I don't know if that was an earnings date or what went on back in November. Let's see, November to now, probably not. That's not a 90-day cycle out here. But that had around 23 million shares. So what else are, I'm going to put this on a weekly chart, but what else so you're looking at this, and why are you totally focused on the downside? What else is it that you're seeing out here?
No, I'm not. Actually, in the past, I've called you like before an earnings report, and you've been able to, you're able to, I don't know if it was, you're able to see it just get out.
No, I was able to use my Karnak, rendition, put this envelope up to my head and tell you what's inside the envelope. But right now I'm struggling out here. Karnak needs, what was the guy's name? Ed, what's his last name there? His sidekick, Ed. Johnny Carson. Yeah.
Ed McMahon?
Ed McMahon. You've got to be my Ed McMahon, and you did not fill the envelope up to tell me what it was that I'm supposed to say out here. The other thing that what Whole Foods is doing right now, it's up against a very important level of support as well. So we've identified that, it's kind of pulling back into an area where it doesn't have the volume necessarily to bust out. It's not giving you and I a clue. Price is up against its TAS weekly profile low out there, and that should be support as well. But if it's got a bad report, if it has a bad earnings report out here, then the question would be, where's this thing headed to? And I would say, just looking at this monthly A to B equals CD down pattern that is in play out here, it would head to its next level, which is around $20.03 out here, and you're at $28.82. But I just don't see a great setup that would say you should take a trade before the earnings release out here.
And you either way, long or short.
Yeah, I don't. Today, if the volume was light today, much like we had done, I think, with Facebook and we had done with Amazon as it was moving down into a level of support, then we could say, you know what, the signal here is that it's going to respond positively. Now, if this does respond positively, Whole Foods, it should find resistance at about $30.13. $30.13 to maybe $30.75. Out there would be the numbers I'd be looking at. I don't see anything here that provides you and I with the information as to which way to take a trade this time around.
Yeah. If I was go long, I'd like to buy it here around 28.50. If I got 28, that'd be great. But I'll be looking for a pop towards 36 and then just move it out.
And they're reporting tonight after the bell or tomorrow?
No, tomorrow. Yeah, I was looking for like a move like Ultimate. It's a retail store. They got brick and mortar. So I was kind of looking for a pop up, and definitely not the 30, a whole lot more than 30, towards 36 and just move it out. And a quick move. Because I think this is, to me, I'd rather be short this stock than long it. But I thought either way for a trade I would do something. And it's that's fine. Good.
Yeah.
All right.
All righty. Hey, thanks so much for calling, and let's make sure we take a look at it a couple days from now. All right, that was Robert in Chicago. Now, we were taking a look at the IWMs on my recollection out here. The SPY. Let's go take a look at the SPY out here. Volume so far today, 64 million shares. Straight line math says you do maybe like around, 100 million or so. And if we take a look at the IWM, let's turn off those profiles as well. I believe we're moving down with light volume again. Now, the volume that we are benchmarking is from 2 days ago, which had 142 million shares. So this is with regard to my question about getting a short inside of SH, and the answer is going to be not just yet. Doesn't appear to be just yet. Where do you want to short it from? 208.21 would be the number inside. That's inside of the SPY. SH. Don't know if it'll give me the number like that. We'll try to do that when we come back from the break. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Before we went to that break, I was trying to answer that question that came in. Hey, where's the entry spot on a possible short inside of the S&P 500? This listener wants to take a look using SH. Again, no confirmed signal inside of the S&P 500. Maybe this the 30-minute patterns that you and I looked at earlier and the lack of volume says that there's more bounce to come. And so the targets that you would look at inside the SH, we'll default to our market profiles out here. And that would say you're looking at the levels of about 2003 down to 1995, 2002. That is your range out there. And potentially at this stage here, that's likely the levels that you would be looking for. Now, question about short-term long on UNG. If we take a look at UNG, that is going to be the ETF out here for natural gas, UNG. And really what we should do is look at that instrument, see what it is doing. But if we take a look at just UNG alone, hi, Steve, short-term long on UNG, what would you be looking at? Well, if we just were to pay attention to this chart, we know that UNG had wide price spread, accelerated-ish type volume back on the trading day of April 19th out here. 10 million shares to the upside. You were moving back yesterday with 9 million shares. Not good. It came back with light volume. Today you've got an inside bar out here. You had a swing point that in essence was taken out with similar volume back here on April 28th. So you're looking for an entry, your safe entry point on UNG. I would have to say is going to be the center of the weekly box at 632 down to 605. If we look at the current contract here, the June contract for natural gas, what does that say to us? That says to us, because this is, better piece of, this is way better for us to look at out here. Let me get rid of that old A to B equals CD pattern. In this case, prices pulled right back to its breakout, the actual candle from April 19th out here. But nonetheless, it looks like what this wants to do is trade back to about $2, 2.01 to be exact out here. And if it breaks below that level, you're looking at potentially $1.90. So that is in UNG and natural gas current contract. We take a look at Intuitive Surgical ISRG out here. Let's go see what that is doing. So this had a real nice pop about a week ago or so. Moved to the upside with volume of 697,000 shares. So that is a high volume-ish high that has not been taken out. Prices come back to the breakout area, and it's done it with lighter volume. Today it's down with 233,000 shares. The question was, and short ISRG. So this trader wants to go short Intuitive Surgical. Let me go over to a different chart and see what else I might be able to see out here. If it's valuable information, I'll go ahead and pull it out over there. And the answer is, so what Intuitive Surgical did, let me show you this. Let me pull this over here now. ISRG is what we're looking at. And we can see that price did move higher and did it with less relative strength out there as it made that nice little doji. You know, people, you'd call it a doji when you take a look at it. I say hogwash out here. Why do I say hogwash? Because you really got to take a look at the prior day's session. Here, I'll just pull this off to the side. Right, it is absolutely textbook with certainty a doji candle. Why? Because it opened at 644.97. It closed at 644.56. You had basically a 30-cent difference out there between that open and close that spread. Doji. But hold on a minute here. Now we're going to forget about that gap to the upside out there, the wide-ranging bar. So not really a doji up at the highs out here. Nonetheless, price was moving higher, doing less relative strength, and so you want to go short this little puppy out here. 635.20. You know, you're at 621 right now. If it can get up to between 640.21 and 635.20, that would be the place that you'd like to go ahead and pull that trigger if you are so inclined to do that. And I didn't do much study with regard to to the downside, but that was the question. Where do you go there? Okay, so I think I've answered the questions. If there's something inside the den that I didn't get to, hey, could you repost that for me? I would appreciate it. And then I'll absolutely do that. Now, so we took a look at the bottoming patterns, right, that show up, right? Bottoming, topping patterns of 30-minute charts out here. Again, intraday. And if we go take a look at the 30-minute time frame charts, here's our 4-panel chart. Very important information that is out here as well, because here we've got a 4-view snapshot of our TAS market profile. So we can see that the ES Mini right now, that's the upper left-hand panel. We'll go ahead and blow it up for you. It's now back above not just a 30-minute market profile, the first one that we gave you, that 2056 level. It's back above the daily bottom of the box. Old support, it should become new resistance when it gets busted through. It's not right now, but it's trading above it. Says you can move higher. Where do you move higher to out here? Whoops. Is there a trend line that has begun inside of the ES Mini that we can look at? Looks like there is. So let's go put the trend line out here. Let's make it a red. Well, I don't know if that's going to be red. Let's make it a red line. There, that was a green line. Let's make it a red line. See what kind of trend line we can get. Is that the trend? Yeah, that would be actually, that's probably the better trend line out here. So what this says is that we ought to see, this is the NQ. I don't even know how I grabbed the NQ. I thought but that's okay. We're going to do the same thing. The NQ, and then we'll go back to the ES Mini out there. The NQ shows us that price wants to get up into the daily point of control out here. That's a brand new daily profile, by the way. And this profile is in the possession of the bulls out here. This is a bias to the bullish side. Why? Because you see that little, that little dash line where my little crosshair thing here. I'll move the crosshair away from there. See how that's closer to the bottom of the box versus the top of the box out here? So at a minimum, we should see the NQ get up to 43.78. That's that point of control. Ought to, run out of some energy there as it runs into a trend line. But if it breaks a trend line out here, then it is not out of the question to see 45.01 to 45.08 in the picture for the NQ. And what could support that? And we'll come back to the ES Mini. It's this guy right here. It's Apple. $192 to the upside. Yesterday, it formed a nice little hammer candle. We talked about how Apple was coming back into a couple of swing points with light volume. It was 55 million on January 28th. Yesterday's hammer candle, 48 million. And we had, 60 some odd or 160 million? What was it? 162 million from back on August 24th. Now you're getting a nice additional bullish sign. So Apple is poised to get up into the 99.44 level. 99.44 to 99.80 is very likely where we will see Apple trade. If it does that, which it should be a no-brainer for it to do that, then that's going to go ahead and keep some energy inside the NQ as well. Now back to those 30-minute charts out here, not to bounce around, but just to try to keep things in some kind of organized fashion. Let's go back to the ES Mini. You might say organized, schmorganized out there, but that's okay. I get that. Is there a trend line? Not as long as the NQ out here, but, we can certainly draw one. And if we're going to do that, we'll go ahead and use this high out here from about 11:30 on April 28th. And there's your trend line there. And that's probably where price heads up to inside the ES Mini. And if it breaks above that and you say, well, what the heck is that? right now I'll give you a price figure somewhere around 2069. If it breaks above 2069, then it's got 2082. Believe it or not, written all over it. So that's what the ES Mini is showing us. And let's go to a break. When we get back from this break, it'll be in our last segment. So if there's any special requests, go ahead and type those in to the Tiger's Den. Dow's off 95, S&P's down 13. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 99, S&P is off 13, NASDAQ is down 28. Let's take a look at some individual stocks out here. Let's go take a look at AutoZone. Leader dollar-wise, the upside up $12.22. Has a nice little candle that certainly has formed here today. Volume-wise, 130,000 shares. Last time it made a high out here was with about 250 and 290. So moving up with some light volume, but no reason for it to not try to get back to that 803 and a quarter level. It's trading at 787.20 as we speak. Chipotle CMG, that's up against a level of, oh, there we go. Thought I blew that. That's up against a level of resistance out here, which right now is the bottom of its TAS weekly box. That's priced out at 444.90. That level ought to hold. If it doesn't, 455.75 would be the next move to the upside. You've got to the downside out here. Let's see. Well, we took a look at Intuitive Surgical, Credit Acceptance Corp, CACC. That's down with big volume, 330,000 shares out here, big volume for it. Last time it had volume, though, was down at the lows with 500,000 shares on February the 3rd. If it can break 179.52, 167.17 becomes the number that it ought to trade to. You've got, well, let's go see what the Nugget is doing out here, NUGT. This is pulling back with volume of about, what is it? Where did it go? Up at the top? I don't even know how I do that sometimes. But 5.2 million shares, and now I just have to go pull it to the downside because I can't read it like that. I mean, I can, but it doesn't make sense to me. Okay, so you got a volume on the bottom of your chart. 5.2 million shares going against a breakout of 9 million shares. So it's pulling back with some light volume into a level of support. The Nugget needs to close below, you'd have to say, 92.56 out here. Actually, 83.59. In the case of NUGT, both the point of control and your bottom of your TAS box are the exact same numbers. Now, this is a profile that just began today, 83.59. You see it close below that, then that's going to spell trouble for NUGT. But that's a long way down. That's 83.59. You're at 104.44 out there. Just please use stops. So what do we know about the market in recap out here? Well, we do know that we've got some nice bottoming signals. Those came in across the board out here. We'll take a look at them again. 30-minute time frame charts out here. We're looking at the ES, top portion of the screen, NQ, center portion, YM, the Dow, that is the bottom portion out here. We're having a nice counter trend rally, although I have to say in the ES and in the YM, we don't have any kind of confirmed signal of a top. In the NQ, we absolutely do. But in the other two, it's just not there, not just yet. Doesn't mean that it can't happen at any time. In fact, our polar bear is going to be up next in a few minutes, and maybe he'll be the one to unleash the hounds out here. I don't know if he has got that kind of control, but you never know with our polar bear out here. But we do know that volume-wise, moving into swing points, with the exception of the IWM, we've seen volume kind of not really be there as it tries to take out the lows from a couple of days ago. Nonetheless, you want to watch that low from 2 days ago, especially inside of the Dow, because you take out that hammer candle, and that price point, by the way, is going to be 17651.98. 17,651.98. That's going to be the key level to be watching inside the Dow. Hey, folks, don't forget, our man Andy Heck has got an extraordinary workshop that begins this evening. Is it this evening? I believe it begins this evening. And hopefully I got that right. And but hey, regardless, come on over to the homepage at TFNN.com. Don't miss out on this party that we have here each and every day. Have a great Tuesday, and I'll see you on wonderful Wednesday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.